Hello, thank you for joining. Today's video will be on a different subject than planned. I received an email by someone who asked me to cover a few questions on the housing market. So I'll read you the email and then we can discuss. It'd be interesting to hear your opinion on housing for the next 1 to 2 years. Is a 15 to 20% drop in prices inevitable if the ECB keeps on raising rates, or even just maintains them for the foreseeable future? Or will this trend be mitigated by sustained demand, a smaller number of new builds, and the government announcing the purchase of unsold inventory? To me, I think we have to look what the driving factors are. It's still inflation remaining stubbornly high. Central banks are still going to continue to raise rates. If we look at the data out of the US, the market is now forecasting the Fed fund rate to raise to 5.25%, which would imply another three or four rate hikes from the FOMC in March, May, June, and July. This will obviously put pressure on the ECB to follow. The question is, will they then follow the Fed by 25 basis points? We already know in March it's going to be 50. I guess we'll have to wait until the press conference on the 16th to find out more. But one thing to remember is, both of the FMC and the ECB have said, once they reach their target levels, they will keep them there for a sustained amount of time. They're going to be overly cautious on inflation coming back. So do not expect a quick pivot. I do not think we will see a pivot from either the Fed or the ECB in 2023. Central Bank member of the Central Bank Governing Council, Gabriel Makhlouf, he has said that he said himself, do not expect rates to actually lower in 2023. How does this leave the market here? Well, as long as inflation carries on being stubbornly high, the rate hike cycle is going to continue, putting more pressure on the market. For me, demand is there, but for me the most worrying factor is the amount of new builds on the property. New build properties for sale. Looked at a well-known real estate portal this morning. There's 4,226. If you look at the first three announcements, I think it was 36 out of 36, 12 out of 12, and 63 out of 63 unsold. They're not going through. Was asked what would be the worst case scenario. I think the worst case scenario could be a reduction of 15 to 20%, but that's only going to be driven, for me, if there's an issue with a large promoter, and if people need to actually sell their actual property. As I mean, if you've got a fixed rate mortgage, if you have no mortgage, all these actual rate hikes are not affecting you at all. It's only thing it's doing is it's slowing down your plan for 1 to actually 2 years. Now, do I believe the government are going to buy some unsold inventory? Yes, that's been already mentioned in the press, but I don't think they'll buy everything. So I mean, it will all come down to the cost of credit and how much the individuals, and I think more actually importantly, promoters can soak up the cost. If the banks start getting a little bit nervous and start calling in loans or forcing sales, this will obviously push the market down, because if these properties are not actually selling now, you have to obviously lower the price to find actually where people are willing to buy. There is demand here. I think it's a strong market for investors. There are a lot of sectors doing well. Law, funds, financials. Sector that obviously would worry me is real estate sector, construction. If developers are under pressure, there's no need to build more properties if you can't sell the stock you actually already have. Will that actually push up Luxembourg unemployment? I think that's certainly obviously an unfortunate possibility. So just to recap where we are, do not expect rates to pivot this year. Interest rates are going to continue to rise whilst inflation keeps stubbornly high and does not retreat fast enough. And keep your eye on inflation data. The more it keeps high, the longer this rate cycle will obviously carry on. Thank you for listening as always. If you'd like to discuss further, you can contact me on 691 458 339. Connect to me via LinkedIn, Denton Lilly. YouTube, subscribe to Denton Lilly Luxembourg Real Estate, or Facebook, add or follow to Denton Paul Lilly. Thanks again for listening, and see you next time.